following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Yeah, good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Dare to believe. Market-wise, let's take a look at it out here. We have the Dow Industrials down 39, NASDAQ off 4, S&P's down 3.5, gold contract up $5.50, traded at $1,130 an ounce. Silver, $14.76 flat. Platinum down $3.70, trading out at $9.31 an ounce. Copper flat at $2.29 a pound. Light sweet crude down $1.80 at $44.56. You're going to see the oil market go south, folks. That's going to take the S&P lower. This oil market, you get some charging down there with juice, folks, okay? We're going to see, we've seen some real action on oil, but we're going to see a lot more. Bonds, you have the 10-year down 5 ticks, 127.30, 30-year off 7 at 155.19. King dollar down 106 ticks, 96.34. King dollar failed at a swing point once again. We're not even talking, it's amazing when we go over this. King dollar, folks, couldn't make the larger swing point 2 weeks ago. Set up a small swing point, come back down, couldn't even take that small swing point out. Euro up 67 at 111. You get the yen flat at 120.16. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, can you see ABC down? Because that's what you got, folks. Let's take a look at this, baby. So what do you have? You get the SPY right now. So check this out. This is pretty cool, folks. We come off a low of the 24th of August. You know, fast, furious, all the way down. The SPY goes from 210 down to 182. Does a counter trend bounce, August 24th, going all the way up to the 17th of September. Hits a price point of 202.89. You come back off that level. First day you have 223 million shares. Then you go sideways, tries to get higher with 105. You go lower again yesterday with 153. Well, guess what? What you have here is that the market's trying to get higher, and it's dying on the vine. You actually got over the highs of yesterday. We've done 70 million. You're going to see that you're going to fail. This is a B to C of an ABC structure on the way down. It's a sweet one too, because your A point out here is the 202.89. Your B is the 192, so you're talking about 10 bucks. If this is the C out here today, you're talking about a 184, and the mind blower is at 182.40 is the low that was generated out there on the 24th. You go take a look at the NDX 100, the 3Qs, same type of setup inside the 3Qs. Market tried to get higher, couldn't handle higher price. The 3Qs, you talk about anemic. This is like as cool as you get if you're into ABC downs. Bottom line is that you go down with 47 million yesterday. We've done 17 million. You've got to a price point of 104.66. You're dying on the vine, and what I expect you're going to see is that you'll see this baby close under the 104.42. What it looks like is that all the indices got over the highs of yesterday, dramatically lighter volume. They're going to close underneath them, and that's a failure on price and volume. It's also probability setup that we get an ABC down structure taking place. We're going to take a look at the gold market. What do we have with gold? Gold right now is trading at 11.30. Gold market out here today is going to need more juice. We've got 86,000 contracts. It's holding price. Bottom line, it needs more juice. It needs like 120,000. You're not going to get that today. We need about 120,000 going into, well, actually not 150,000, going into this 1141.50 area. King dollar. Let's go look at King dollar. King dollar is going to give the metals market a break here. And this is what you have. It's pretty amazing, actually, looking at King dollar, because King dollar has done this. King dollar is trading at a price point of 96.29. We've done 39,000 contracts today. Now check, this is what's wild about King dollar. You have major swing points, minor swing points. And what a minor swing point is, folks, is that you have, and all swing points are changes of direction in markets, right? But that's where the markets talk, walk, and squawk. So your major swing point inside the dollar is 98.78. That was the high that was generated August 7th. We come down off that high, vicious volume, down into 92.85. As we try to get higher, okay, the bottom line is that you have a minor swing point from the 19th of August that it couldn't even get into, which is just crazy. That was 97.40. So we come off that. Where do we get to? We get to 96.92. Can't handle that. Well, guess what? This is what's really bizarre. We got to 96.71 today, and it should have been able to make 96.92 because that's not even it's a minor swing. Well, we couldn't make it. And you get the volume dying. Bottom line, what does that set up? That sets up dollar index again, wants to run back to the 95 to 92 area. That's just a heads up in a huge way. Heads up for what? Heads up that lower markets are coming at us, higher metal markets are coming at us. Now, bonds. Let's go to the bond market. What you have with bonds is this. Bonds today made a run for a higher high, okay? The volume in it also is not bad. With the 10-year has done 812,000 contracts today. We're at 127.30, which hit 128.11. 128.11 got you into the spike high that was generated out here on the 24th. What that sets up is I expect tomorrow, the next day, bonds are going to continue to try to get at their highs, in their highs, and the 10-year looks like it wants to get over its high. The high of the 10-year bond is 129.10. The yields right now, we're yielding 2.1 on the 10-year. We go to the 30-year. What do you have with the 30-year? 30-year, you've done 176,000 contracts. That's going to need a lot more contracts. That's not pushing with volume. We need more contracts on that 30-year in order to get the higher price. I do expect we're going to see it, but bottom line, it has to prove itself. Oil. Now, this is where it gets really wild. And okay, so oil numbers come out today. Numbers weren't bad. The market itself, though, folks, went south, and you're going south with some mean, nasty volume. Okay, so check it out. Price spread out here today, 47.15. We're at 44.65. You're doing 383,000 contracts. You're going to come into the bottom of this. My take, oil's going to be running down to 40.51. We'll see whether it wants to hold at that price point. That was the last low that was out here. This is Tom O'Brien. This is TFNN. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. We know what's going on in your world. Now, in the world of the markets, folks, last night in Asia, you had the Hang Seng down 2.2. The Shanghai was up 2.1. And Europe today, we had the FTSE up 1.5%. The DAX was up 0.4%. Now, the FTSE wasn't a bad move. That was down 3% yesterday. It took half of it back. The DAX, however, is screaming that it wants to go break its bottoms out. This is going to be intriguing to see how this reacts tomorrow morning. What we had out here today is this. If you take a look at this DAX, DAX is trading at a price point of 91.12. I'll get the volume in another couple hours. You did have an expansion of volume yesterday as we were trying to get into the 24th. The 24th, August 24th is your benchmark out here. Bottom line, you have 9338. We got to 9492 today. So it's $160 above that low. This is building cause to blow away that low. That's how this thing is shaking out at this particular point. You take a look at the weakness today. Well, here, if we look at our own markets, this is what you have. The Dow is down 0.2%, the S&P 0.1%, and the NASDAQ 0.9%. Inside the Dow Industrials, the strength versus the weakness. Strength is Pfizer. Pfizer is up 42 cents. Visa is up 66. Apple is up 92. And Merck is up 35. Taken away from it, on the way down, you had Caterpillar. Caterpillar is down 137. United Technologies is off $1.50. Boeing is down 188. And you get DuPont off 64. We look at DuPont. What you have here is that the large caps, folks, are just amazing what's going on here. DuPont is the first large cap I've found that has taken out the August 24th low. That's a big heads up. The low of August 24th, 41.08. Bottom line, we're at 47.94. This baby's going lower. Honeywell looks like it's going to be the next one. If you take a look at Honeywell right now, Honeywell has a while. Honeywell is down 162. Yeah, that was a spike low of 87. You're only at 94.41 right now. Wicked expansion of volume also on Honeywell. You're doing 4.8 right now, getting into this area of 93.81. Now, folks, let's go over to our man, Mr. Darryl Martin. And don't forget, every Wednesday, Thursday, 12 to 1 Eastern Standard Time, Darryl has a great show right here at TFNN. Get it right on your cell phone. TFNN.mobi. That gets you the audio. If you'd like to get the video, go to TFNN.com. On the right-hand side, you're going to see a box with devices in it. Hit that box. Our servers are going to understand what type of device you're on. You'll get Tiger TV. Daryl specializes in the Nadex platform. If you haven't tested that platform yet, folks, great time to do it. High volatility. It's a defined risk type of platform. Daryl, I, and my son Tom, we also do a great program on Friday mornings, 10 to 11 Eastern Standard Time. Daryl Martin, what's going on?
Hey, man, how you doing?
Doing great, man. How you doing?
I'm doing fantastic. It's been a great day.
There's no doubt, there's something for everyone out here. And when I say something for everyone, folks, okay, if you are trading intraday, we've been in a range, and the bottom line is we've been up and down that range. Today it really doesn't matter whether you're a bull or a bear. If you're buying or selling, or you're flipping both ways. There's no two ways about that, man.
Exactly. And today we're doing some spreads. We had some fun on the Diagnostic Trading Hour.
I heard it. It was a beautiful thing. Totally.
Yeah. And closed out at our target.
Yeah.
So I said, hey, it's going to go on up. And I said, look for it to hit about 42.65.
Right.
And it hit right up there, pulled back down. We took profit, made about $500.
Good for you, man. Yeah, I was listening to you. I thought you were out of your mind.
Oh, you did?
Well, I kid. Well, I always got my claws out.
I know you're always looking for the short.
I know. I was
short
man,
earlier.
I know it was a range, man. I'm just kidding with you, but
You're like, it's going down to
folks,
2,000.
you gotta picture this office around here, okay? When I'm doing the program, I got screens up here. I'm trading on one side. When I'm in my office, there's the same thing going on, and of course, I always have TFNN on, so. I'm just joking with you, but, I was real.
You're like, long. He ain't going long. What are you talking about, long?
No, I know, man. It's sad. It really is sad. I know. So,
I just think I guess left and right,
Now, well, you know what? It was really explain exactly what you were saying then, because it was pretty cool. Because what was happening, folks, is this. So picture this: the trade was actually setting up, and if you haven't heard his program, it was awesome, man, because he was bringing them through it. That the trade was setting up, and then it set up, which I thought was really cool. Do you know what I mean?
Exactly. Yeah, we were going over here, and the market was heading down.
Yeah.
And I basically backed up on the chart, and I'm like, okay, we're coming into a pretty solid resistance zone from last night. We're in the nice volume zone from yesterday.
Right.
And so I said, I'm looking for a long, but I'm waiting for everything to line up.
Yes.
So I don't just jump the gun. Then I talked about, okay, now that we're going to look for a long, we need to look for the right spread and be ready.
Yes.
I'm expecting a long. I'm not going to hit the button, but when I'm ready to hit the button, I need to know what contract I want.
Right.
And so I went through and I chose two spreads. One of them that was a better risk-reward ratio that was, had a little bit of premium in it, but it wasn't too bad. And I chose another one that had a lot of premium in it, like in my favor.
Nice.
So I was collecting premium on that, and I did those back to back. And I said, okay, now where are we going to go? We're going to go up to the point of control, right into the settlement zone here.
Yep.
Expect the market to hit about 42.6550. At that point, you need to be looking to tighten your stop, take profit, somewhere around there. And the show ended, but about 15 minutes later, it popped on up. And
oh no, I listen. It's awesome. And folks, once you get the account set up, and they'll put $25,000 of paper money into your account. So come over to our website, hit the Nadex banner. You can bring the account up. Now Daryl has a scanner, and you just heard what he was saying, that he was looking at a couple different contracts. Now the scanner's not going to tell you whether to go long or short. What it does do, it's going to tell you the best probability though of your risk versus your reward. And then it's always been great, but in this market, folks, because we have a high premium market, because the volatility is so high, it's crucial, because you can be right on your direction. If you're wrong on how much premium you're either giving up or buying, bottom line is that, it's pretty intense, man.
So it was a great show. And I mean, it makes it easy, because I mean, the binaries, I mean, you can sort of get away without using the scanner. Okay?
Yeah, right.
Now the scanner is a lot faster because it has instant submit, and it has the stop trigger, and it lets you look at multiple markets and expirations at once. So It does have definite advantages that make, I think, it faster and easier to trade.
Sure.
But the spread scanner, there's a lot of math in options and spreads.
There is.
And it's so easy to make a bad choice. I was just talking to some traders right before I got on the air with you, and they were talking about spread selection. We were going into it. And one of the ones like, well, the risk reward messes me up, and pardon me. Anyways, risk reward messes her up, and she's like $50 in risk, and I'm like, yeah, but it's 15 points away,
right,
from the market, and so like your chances of being profitable and that are so low, I'd rather put up $100 and actually be able to make some money as put up $50 and just throw it all away.
Oh, there's no doubt.
You know?
And you know what I've found? It was really interesting, too, because when we were doing the show, Tommy and I, on Friday, right, I had taken a spread and, you know, like I just hit the baby. And realistically, what ended up happening is that my reward versus my risk wasn't that great. Right. Now, and watch how this came, folks. This is pretty cool, actually, just even understand the aspect of it. You know, here, Darryl, stay with us a second, all right?
All right.
Okay. This is Tom O'Brien, Darryl Martin. Our phone number is 877-927-6648. You stay right there, folks. Darryl and I are coming right back. Dow is down 61, Nasdaq's off 7, S&Ps are off 5.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is off 43. Nasdaq's off 2.5. S&Ps are down 350. We're talking with our man, Mr. Darryl Martin. We're talking about trading on the Nadex platform and, in particular, risk and reward. So last Friday, Darryl, what had happened is that I grabbed this trade, and it was the NDX 100. Okay, and what I did, folks, is this: is that you normally like to go either 2-to-1. To more than that, whatever, okay? Right. Bottom line is that, and I'm a directional trader, okay? So what had ended up happening is that the top of the range, I was selling it, okay? So let's say that, just say the top of the range, folks, well, in this case, let's say, let's see, the NQs. Let's say the top of the range was 4,300, okay? Bottom line is that it was like 2 or 3 points out of the money, okay? And when I did it, instead of really just using your scanner, what ended up happening is that I'm looking at it, I just looked at it quick. I says, okay, that's, you know, about 1 to 1.75, not bad. Well, the bottom line, folks, is that what happens is that depending on how fast you are with numbers, it wasn't a 1 to 1.75, it was a 1 to 1.5, okay? So what that means is that, you know, you got to win almost every trade, okay? So we're going over this on the air, and I'm looking at it. Now, the cool thing goes like this, folks, is that the premium that you paid, and I paid premium because what ended up happening is that it was 3 points over the market, meaning that the market at that point, the premium inside it was 10 points under it, and, Daryl, I only had a 30-point spread, okay?
Okay.
So that was the problem, folks, because you see what happened here? I'm paying over for it. I only can make 20 points on the downside, and they already gave up 10. I was like, oh, man. So it was intriguing. So what I end up doing, the bottom line, now the cool thing here goes like this. When you pay the premium, because it was so volatile anyway, that premium stayed in it to like about 20 of 4. And I got out. You know what I mean? I maybe lost $10 or something. Do you know what I mean? But I was psyched because I would have lost everything anyway at 4 because it didn't go. Do you know what I mean? But I really learned something there because I was looking, because you know I should know his name by now. The guy from Dallas that trades a lot, the Nadex product. He calls in a lot.
Mike?
Yeah, Mike from Dallas, right? Because what had ended up happening, this is what's so, listen how perception is so bizarre. Mike had called in the week before, and I said to him, I says, no, man, you're giving up too much premium. Do you know what I mean? And I did the exact same thing. It was just a different number. It was like, oh, you got to be kidding. I did the exact same thing. And it was almost right to the T, too, man. So I know, isn't that wild?
It's easy to do. Yeah.
It is easy to do.
Now you see why I spent all that money making that scanner.
No, for sure, man.
It adds up, man. I mean, $100 here, $100 there. Do 20 contracts, 100 contracts a day.
It adds up dramatically, man.
Yeah.
It adds up dramatically.
I made it for my own trading, and I just shared it with others. You know?
Yeah.
So
it's so cool, man. It really is, and you have to wrap your head around the percentages, folks, because those percentages, just 5, 7, 8%, makes a huge difference, man. It's just a huge difference. Never mind, I was off by quite a bit, man, but wild,
Yeah.
Hey, listen, folks, if you happen to be, Daryl and I, a lot of the Tigers and Tigresses, that's right, we're going to be out in Vegas. October 14th through the 16th, we're going to be at the Paris Hotel. Traders Expo out there. Come on out and visit us. Andy Heck's going to be there. Daryl's going to be there.
Oh, Andy will be there too. Sweet.
Yeah, he lives there. How good is that?
I didn't even know that.
Yeah.
I just know every time I go out there, he's there. I guess I know why now.
There you go. Exactly.
He's got some awesome stories.
Yeah, he does. There's no doubt. No doubt about it. So give us an update on your daughter with her rodeos.
Oh, rodeos. Oh, she is rocking it, man. She just took first place in every event she was in last week.
Wow.
And so taking that, she is one more rodeo away from taking the title at her rodeo series.
Okay.
And that's all ages. So she's racing against teenagers, people
That's
that are 20,
crazy,
30,
man.
40, and she's 8.
That's amazing.
Yeah.
Wow.
So,
well, congratulations. Can't wait to see her. Hopefully, maybe I'll see her at one of these Traders Expos. She's probably too busy riding horses now, right?
She already asked me if she can go to Vegas. I'm like, you're already missing school for rodeos. So, because I've taken her out to Vegas.
That's where I met her, right?
She loves it. And she's like, can I go to Vegas again? And I'm like, well, the problem is you're going to miss like 4 or 5 days of school already for rodeos because we'll take her out.
Yeah.
Because we're driving to San Antonio or wherever we're going.
Right.
And but she's got that. She's competing in what's called the Little Britches competition. It's a big nationwide, like 38 states are involved.
Okay.
And so she's going for the world title on that. She has like 6 more rodeos to go there.
That's crazy.
She's about to compete at the Fort Worth Stock Show and Rodeo. So we're lining up the year right now.
My God.
And she's doing well though. She's making money and kicking butt and surprising everybody.
I'll tell you. And folks, if you haven't seen it, Daryl does a show too. He puts up some pictures. So his daughter does barrel racing. And when you see the angle of this horse going around a barrel and this, little girl on top of it, it just blows your mind, man.
Yeah, she'll be like running at 45 degrees.
Yeah.
So, I mean, it's insane angles that she'll go on.
Well, good luck when you're going to be buying her a car, man. She's going to end up being a race car driver, too, probably.
No. We'll stick to the horses. That gives me enough of a heart attack as it is.
I love it, man. I love it. Well, listen, man, thank you so much, man. We appreciate it, and we look forward to the show tomorrow. Look forward to seeing you, too.
All right. See you
Okay,
there.
man. Have a great one. Have a safe one. Market-wise out here, folks, this baby, let's go take a look at the NQs for a second. What I expect you're going to see here, we've already hit higher highs, can't handle higher price out here. We'll flatten out coming into the close out here. Bottom line, what I do expect you're going to see is that all these indices going to be slightly in the red. Let's go to our man John in Philly. We missed John in Philly. Okay, that's all right. He wanted to look at the GLD. So if we do look at the GLD, this little baby is in a consolidation. It's going to need more juice. Today it's holding price, but bottom line, we need some volume in this baby. We put this on a weekly. You're also going to need some juice. The weeklies on these look really good because what you do have is that you have that high spike from 112.12. You did 54 million shares there. You backed down with 25 million. Last week, we did 25.7. That's what you need. We're backing down this week with 11.9 thus far. That's a nice setup, because it's consistent that you've gone higher with volume. You back down with lighter volume. Now this is where it gets subtle. You still went higher with volume, and this week you're backing down with lighter volume. That's what you want to see. That's when you're building cars to get into higher price. And what the GLD has shown is that it's staying inside the 107.08 area, which was the week of the 28th. And I like the setup inside the dollar index. You know what's so wild, folks, is that there's no doubt the dollar is the best of the crowd because if you hadn't seen it or heard it yet, Brazil, you want a vacation, go to Brazil, folks. The rail's never been so low. 1994, it's 4-1. Bottom line, go buy a ranch. You can buy the ranch. I was looking at real estate today in La Paz. I started with ranches. Then I went into the city. The city's still a little high. It's going to be a little bit longer. But bottom line is that, want to get in the agricultural business? We'll have to talk with Daryl. Maybe get a horse ranch down there. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow is down 45. Nasdaq's up 3.5. S&Ps are down 4.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. And over at PIMCO, which is the Pacific Investment Management Company, where Bill Gross used to run the whole deal, they're saying that U.S. inflation is going to pick up at a time when the Treasury market is signaling just the opposite. This is their quote: "Investors should brace for inflation gains and the prospect that the Federal Reserve may raise interest rates more quickly than forecast. Markets are probably pricing insufficient tightening by the Fed based on a baseline forecast of above potential growth and inflation getting back above the Fed's 2% target over the next 4 quarters." Bottom line, it's definitely a different story inside the bond market, because the bond market right now, the bond market is basically saying that rates are not going up for a bit. What gets intriguing here inside this is that you have PIMCO coming out, and the same day, Bill Gross used to run PIMCO. His take is the same. Gross tells the Fed, get off zero as the economy runs on empty. Bill Gross said the Federal Reserve needs to raise interest rates as soon as possible. If zero rates become long-term norm, economic participants will soon run on empty because their investments aren't producing the gains or cash flow needed to finance past promises in an aging society, he wrote in an investment outlook on Wednesday. Now, check this out. This is where all self-interest takes place, folks, in a huge way. They're both talking about their book. The thing that's intriguing about, I heard the Bill Gross one this morning, and what Gross is saying is this. He's saying that the Fed has to go up on rates so that the banks and the insurance companies can make more money because of the fact that the rates are so low that they're not making enough money for the promises that were promised out over the course of the years. Well, that doesn't matter. I mean, that doesn't matter in the context of what someone promised on the expectation that you're going to basically take someone's money and say you're going to make more money with it. Where I think they all have a valid argument. It's not a valid argument, but what you do have happening is this: is that the large funds, because of the fact that interest rates are so low, what has happened is that they're getting into the same trades and they're leveraging the same trades. That's a problem. What ends up happening is that, let's say that a pension fund, is out there and said, okay, we can make 8% a year. The pension funds themselves, by the way, especially all the state pension funds, even the big companies, they've always said they can make more money than they've ever made. Meaning, we can make 7% a year. I'm talking about consistently over the years. The bottom line is that they've always said too much money. And what that has to do with the amount of money that the corporations have to put inside the pension funds every year and the amount of money that states have to put inside their pension funds to fund the liability. That's all that's about. So they always bring that number higher. The market, well, to stay with the aspect of how the funds are trying to make 4%, 5%, they are leveraging up, and they are leveraging up in a huge way. You know, what ends up happening with a leverage up situation, it's not like putting a mortgage on 50, 70%, 80% of your house and you still have equity. What they're doing, and the banks are backing them on this is where the problem comes in again, is that in the bond market, you can leverage bonds in an incredible way. You can leverage Treasury still 10 to 1. You know, so if we look at a Treasury, here, watch how this goes, folks. And this, I'm talking about a retail trader can do this, which is just insane. But you can imagine what an institution can do. So the retail trader, you know, let's say a bond's the bond is trading at 127.29. Now that bond, folks, okay, is worth $127,000. Okay, you know what you can leverage at that at $1,500. $1,500. Yes, you heard that correctly. Now that's a retail trader. You can imagine what a institutional trader can leverage that at. Now that's, I just gave you the idea of how you do a Treasury. The high yield bond market is a little bit different. They're still highly leveraged though. So what they're looking to do is that they pile on top of it, trying to make these thin slices just to make up 2, 3, 4, 5%. You can imagine when it goes south the other way. When it goes south, of course, leverage is a two-way deal. On the way down, it just absolutely, you go 5% down in a leveraged position, like they're leveraging 10, 12, 13, 14 to 1, it's a wipeout. It's a wipeout ASAP. What is going to get intriguing, no doubt, inside the Fed is that my take right now goes like this. I think the Fed knows that inflation is going to take a while. I think they've decided that, guess what? I'm going to let inflation fly first. That's how important they don't want to go up on rates, and they're not going to go up on rates until they think that inflation is hitting over that their rate is 2%. Bottom line, you know, I think when you look at food, the oil market's helping them tremendously right now. That won't help them as much starting the next 2 or 3 months, and this is why. See, the core, we're at 1.8 in the core inflation rate right now. The core, because the oil market cracked last year over year, that now is not going to help them where it has helped them the whole past year. Watch this if I put oil up, just so I can show you how this is so important inside the core relationship. If I put oil up for 1 year, what you're going to see is that last year, right at this time, oil was $94.90. Oil has gone down this whole time. Now, when you start doing month to month and year to year differences, starting in December of this year, guess what? The core rate, when you take the oil expectation, is not going to help the core rate go down anymore. In fact, if oil goes up over $49, it's going to make the core rate go up very, very quickly, because what hasn't gone down, food hasn't gone down, housing hasn't gone down, the oil market has gone down. That being said, bottom line, I think we're out June 2016, somewhere in there. The Fed's not going up until they know that this thing is running away. Some of the high volume stocks in this low volume market, because what we've done is that we've gone over the highs of yesterday. You're going to close underneath the highs of yesterday. That's a B to a C of an ABC structure on the way down. You get GE up 4 cents. You get Apple up $1.12. Ford is down 26 cents. You get Sprint up 6. Some of the Dow stocks out here. Walmart's up 20. You got Big Blue down 75. Exxon's off 21. Oxy's down 86. We go take a look at Oxy for a second. Oh man, look at this. This is it. Oxy's breaking its lows. Okay, lows of the 24th, 64.83. We're at 64.92. We've hit 64.67. It's going to go. This is problematic. Where you get large caps coming into those lows and they're breaking those lows. That's saying, bottom line is that we're going to go after those lows. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials down 21. Nasdaq up 4. S&P's off $1.50. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And for all you folks up in the Boston area, this is pretty wild. Citigroup is going to close all its Boston branches to focus on areas where the lender has a bigger presence. Now, this is just months after describing Boston as their key market city. The bank's going to shut 6 retail outlets in Boston and an additional 11 in the surrounding area coming this January. Bottom line is that it's pretty wild. Citigroup is spending money on enhancing its digital channels and building a new branch network in major target markets where we have sufficient scale, the New York-based bank said in an email statement. In Boston, Citigroup's retail banking presence does not provide such scale, so we're relocating our resources. What's pretty wild about this is that in a presentation to the bank, in a presentation, let's see, on a PowerPoint presentation just 2 months ago, they outlined 7 markets that were great markets for them, and Boston was one of them. So much for what you can believe a bank is saying these days. No two ways about that. Coming into the closeout here, what you can expect, folks, is that we're going to have basically flat markets. They're all going to be down slightly, but you get flat markets. You get the SPYs, the diamonds, the IWM. They all try to make a higher high, haven't been able to handle it. The SPYs right now are trading at 193.67, and they traded to 194.67. You're going to close under the high of yesterday. You're going to have lighter volume. That's setting up an ABC structure on the way down. The Q's the same way. Q's are trading 104.25. They'd have to close over 104.42. The IWM set up the same way. Or the IWM actually different. No, the IWM never made the high. So the IWM is trading at 113.53. And that's going to sideways move, and that's going to need more volume for lower price. What you can expect, so tomorrow, let's see, we're coming into a Thursday. Bottom line, the market's going to have a hard time getting any traction Thursday and Friday after you've had 3 days of non-action. After the closeout here, you get Micron Tech coming out with numbers. Micron's down 58 cents right now, trading at 14.83. Micron looks like it's going to go after its swing low, 13.50. That's it's going to be intriguing, of course, because if we bring this up and you take a look at it, that swing low that we're talking about, that's the August 24th swing low. As the market, now this is what's so cool. This is the type of information you can grab out of markets. So Micron went to 13.50. Then it did a counter trend bounce to 17.97. Now that's a monster bounce, folks. Okay, percentage-wise, you're talking about $3 on a third. You're talking, yeah, $3. 13.50, 14.50, yeah, $4. That's a monster. And if we're right back here, that's all it was, a dead cat bounce. No juice on the way up. You're getting a slight expansion on the way down. You're already into the trading bar. So you're already into the trading bar of the 24th. So this is going to be a heads up right after the closeout here as to where some of these chips are going to go. If we go take a look at Intel, Intel certainly isn't a Micron Tech, that's for sure. Intel's trading at 28.74, and that looks like it wants lower price, but it's not a bad setup actually. It's nothing like Micron, that's for sure. Apple still can't get out of its way here. The next leg down in this marketplace, you're going to see Apple's going to make a run. I suspect that run's going to be trying to get not necessarily to its low, because that spike low of 92, it wasn't. It probably not, well, it traded there, but 200 shares. I do expect you're going to see 103 though. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back with some numbers for you after the close. Dow down 34. Nasdaq is up 2. S&Ps are off 2.5. Gold's up 440. Silver's trading at 14.68. Bonds, the 10 years 127.28. 30 is 155.15. We'll be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. And I'm so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over again in the morning. How cool is that, right? Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, Guys, let's take a look at it out here. We have the Dow Industrials down 50, NASDAQ down 3.5, S&P's off 3.5, gold contract up $4.80, trading at $1,129 an ounce. Silver up a penny at $14.77 an ounce. Platinum down $3.50 at $9.32 a pound. Light sweet crude off $164 at $44.72 a barrel. The oil market, folks, took it on the chin today. Now, the price doesn't look bad. The price spread was large, couple dollars. The volume expanded in a big way. What I expect you're going to see out on here tomorrow, we're going to have a tough day in the oil market. This oil market's going to make its run back to 42 to 40 bucks. It's going to be wild watching this shake out because there was a lot of selling inside that oil market today. King bonds, 10-year down 7 ticks, 127.28. Now, the 10-year got higher intraday. Volume was pretty good. The 10-year looks like it's going to go after its highs of April. Now, the highs of April are the highs in the 10-year. We'll see how it handles that high, but I do expect you're going to make that run in the next 2, 3, 4 days. 30-year. 30-year is down 10 ticks, 155.14. 30-year also made the run. 30-year, however, is going to need more volume. Now, that's a little divergence. We'll see where that shakes out. But bottom line, 30-year does need more volume. King dollar. King dollar down 71 ticks, 96.37. King dollar couldn't handle price. What King dollar did is this. Last 2 days, first day off the low, wasn't bad volume. Yesterday, it contracted by 20,000 contracts into the September 9th downdraft. Today, it failed on price and volume. King dollar wants to pull back down, go try to test out the August 24th high. We'll see how it gets into that high. That high there's 95.42. Euro up 64 at 111, and the yen flat at 120.26. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them, folks. And we have harmony across these markets, and this is what it is. If we use the SPY, what you're going to see is that the SPY today, all the markets, by the way, try to get the higher price. And they got sold each and every time it tried to mark time into higher price at all. The SPY went to a price point of 194.67. You did 90 million shares. So what that did is this. It got over the highs of yesterday. It closed under the highs of yesterday. The high of yesterday was 194.46. Your volume was 153 million. What does that mean? You get a failure in price and volume. More than likely what this is the C point of an ABC structure on the way down. So what do we have? Your A point is 197.56, which was generated, your A point rather is 202.89, which was generated on the 17th. Your B point is the low of yesterday, which is 192.56, so it's a 10 point. It's a big 10, it's a big A to B leg. Your C point very well could be today. If that's the case, your price projection is 184.67. Well, 187 is the lows of the 25th of August. The 24th of August is 182.40. That's telling me that we're going to go after this low. That's your SPY. NDX 100. 3 Qs. Same setup what the NDX 100 did. NDX 100 today, the Qs go to a price point of 104.66. The high of yesterday was 104.42. We did volume of 47 million yesterday. You did 21 today. Half the volume. Not even half the volume. Couldn't even hold price. A to B equals C to D. Your A point on this is 108.72. Your B is 103.13, so it's at $5.50. Your C is 104.66. Let's say the high of today. What's that give you? $99. And $98.01 is the low that was established out here on the 25th. That's where I figure we are making our run to. Now, let's go take a look at the gold market. What do we have with gold? GCZ5. Okay. Gold market out here today, we need more volume in gold. Nice set, not a bad setup, okay, but we need more volume. Gold out here today held price. It was up $4.70. You did 88,000 contracts. We need about 150,000 contracts going into this 1141.50 area. It had 150,000 last time it went up there. This is still building cause for higher price. We'll see how this shakes out tomorrow. Silver, we look at the silver market. What we have with silver is this. Silver just creeped and just saved itself yesterday, from breaking down underneath this $14.42 area. What silver did today is that it got to a lower price point than yesterday, and we had a contraction of volume, and that's what you actually like to see. Yesterday in the silver market, we did 45,000 contracts. The low was 1469. We're at 1475. We tested the low, and we did that with 25,000 contracts. That is what you need in order to get to higher price. Bonds, bottom line, bonds continue to want higher price. This is really wild, watching how this bond market is shaking out. So if we look at the bond market, we start with the 10-year. What we have with the 10-year is this. It did 862,000 contracts. We got to 128.11. Well, the low of the high from August 24th is 128.05. This baby's going to be right back up there. And what I expect you're going to see as you move up into that level, folks, we'll have the 10-year test. You have a 30-year test. The notes, the 2-year notes, the 30-day notes right now, which is still amazing. Bottom line, just running about negative right now. Our 2-year yield is 2.150. King dollar. Now let's take a look at King dollar, because if you're in the metal market, King dollar is a big number. We did 40,000 contracts today. It got to a price point of 96.71. Well, it couldn't even make the swing point. And the thing that is consistent about this is that the last time that King dollar was up, which was on September 3rd and September 4th, it also couldn't make the swing point. This hasn't been able to get to a swing point, higher swing point that is, since August 7th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back with some numbers for you. Mike Ron's going to be coming out with some numbers. Dow finished down 50. NASDAQ off 4. S&P's down 3. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, this is, the Volkswagen scandal, folks, no doubt has taken Volkswagen, cut the stock in half in all of a week. But check this out. This is pretty amazing, actually, and I forgot about this, okay? And this is nothing new in the context of car companies. When you hear some of this, it's like pretty wild. I just forgot about it, actually. Okay, so what this article is about is that almost as soon as governments began testing vehicle emissions, automakers found ways to cheat. In 1970, some cars were found to be rigged with defeat devices that turned off the emission system when air conditioning was turned on. Others had sensors that activated pollution controls only at the temperature regulators used during the test. The concept of the defeat device has always been there because there's such an incentive for the manufacturers to cheat on emission tests. The scandal now engulfing VW, which has admitted to outfitting cars with software designed to give false readings on emission tests, is unique both for the size and the digital complexity, but is not the first emission cheating test, even for the German-based company. In 1973, the Environmental Protection Agency accused the automaker of installing defeat devices in cars it wanted to sell in the 1974 model year. VW admitted that in 1973 it sold the cars with the devices. They suspect at that point that VW had sold 25,000 vehicles with the cheating technology. Then Attorney General Elliot Richardson took the company to court for violating the Clean Air Act. They settled that first one for $120,000 fine without admitting any wrongdoing. So that goes back. Where do you see this history, man? This is history, not just for them. I'm going to go through the history. It's pretty intense. So that's 1970. What did I just say? That's 1973, okay? So next. In 1995, General Motors agreed to pay $45 million after being accused of selling 470,000 Cadillac luxury sedans. That was their V9-liter V8 engines that actually turned off the pollution controls when the air conditioner ran. The government alleged the engines, which were installed from 1991 through 95 years, ended up releasing 100,000 tons of excess carbon monoxide into the atmosphere. GM had disagreed, but it was willing to pay the fine to get rid of the deal. This is like the SEC, right? You pay a fine, you don't go to jail. Bottom line is that you know how that deal goes. They pay billions. The banks have been paying billions of dollars worth of fines, claiming they've never done anything wrong. Anyway, so GM ended up paying $25 million. That was in '95. Watch this, though. This is crazy. Here's the next one. Okay, 1998, Caterpillar, Detroit Diesel, Navistar, and Mack Trucks paid. This is a trip. They really paid some money. They paid $1 billion, including an additional $83.4 million in penalties to settle the case. That's when Janet Reno was the Attorney General. In 1998, Honda and Ford, two separate cases. Honda settled for $267 million. Ford for $7.8 million. Last year, Hyundai and Kia settled for $350 million. it's pretty. The thing that's amazing is that when I first read about this, I'm saying to myself, what are they, crazy, man? You know, you're talking about an aspect that it's criminal. That's the real bottom line. But we can see that it's been going on forever. What's going to get intriguing here is that someone brought this up in the den yesterday, and I also can't picture it that you have the aspect that it was just Volkswagen that is doing this with software. You know, I start looking at a few other car companies. I'm saying to myself, okay, what do these charts look like, man? Because the bottom line is that I think it would be unusual that it would just be one company. Bottom line is that what you did have out here today is that the Volkswagen CEO got canned today. And if we go take a look at this chart, where do you see this chart? This chart is like such a mess. It's amazing. And Volkswagen, by the way, folks, is the largest car company in the world. We take a look at Volkswagen. What you're going to see is that the high is, now this is, I'm in Germany, so this is in euros. The high is 262. Right now you're trading at 1150. And if we bring this back and take a look at where this is going to shake out, this looks like it's going to go down to $83. $83 to $62. That's how it's set up right now. And in our country, the acquisition is 400 and something, about 500,000 cars. Worldwide, however, Volkswagen, you're dealing with 11 million cars. The thing that's bottom line, they're going to pay up. You know what blows my mind? On some of these, I guess, I can't picture that they actually made more money than they're going to pay in fines this time. You know, the banking structure, the way the banks are set up is that now it's just part of the overhead. That's how that shakes out. The banks, no doubt, do whatever they want to do, and that's just part of the overhead. In fact, you know what? Yesterday, they had they had the CEO of Wells Fargo on CNBC, and they had the CEO of BB&T. And the CEO of Wells Fargo was talking, well, the ex-CEO, okay? He was talking about the regulations inside the banking industry, that he felt that they were too bad, they were too much, and that the banks were in trouble because they had to spend so much money on compliance. The amazing part, what I heard was this: J.P. Morgan Chase, right, has, let's pull this up for a second. J.P. Morgan Chase has 237,000 employees. He was saying that inside the 237,000 employees, 20,000 of those employees are in compliance. And the first thing I thought about is that, well, what are they doing? Because the bottom line is that J.P. Morgan Chase has got fined billions and billions of dollars for being non-compliant. Okay, in fact, yeah, I think they pled guilty to a felony. It's like, you might have compliance people in-house, and you might have 20,000 of them, but guess what? All they're doing is figuring out ways that they can get away with doing more, and/or they're looking the other way when someone's doing something. Pretty amazing. Our phone number is 877-927-6648. We go take a look at the XAU, the HUI out here today. They both backed down slightly. The XAU is trading out at $44.61. That backed down yesterday with 48 million shares, backing into 44 million. So how we back down, this is more than likely going to try to back down a little tomorrow. It's going to be important. Why? Because the XAU right now, 44.46 is out of the range, meaning out of the higher range. And that's only, 15 cents away from it. Gold Bugs Index, we're at 104.74. And that is only 16 cents away from it. So this baby is pushing on these bottoms once again, and we'll see whether that bottom wants to hang tough tomorrow or break down. This is Tom O'Brien. This is TFNN. Dow down 50. Nasdaq off 4. S&P's down 350. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And, we were talking about how oil was trading out here. So check this out. The oil market out here today had a price spread. Let's pull this up. I'll put this on a daily for a second. So we had a price spread out here from 47.75 down to 45.30. Monster volume came in this. Now, where the danger is in the oil market is this. When we came off the bottom, August 24th of $39.65. Nice expansion topside, go to 50. Building some cars. What you had out here today, this is pounding the lowest swing point of 44.67 with volume. That's telling me, number one, I thought it was coming back to this sign of strength anyway. But when you're coming back to a sign of strength, folks, you don't want to come back with monster volume. I do expect you're going to see oil run into this 44.67 tomorrow, because that's the way it's set up. And it very well can get right down to the 40.57. Now, if we come with the same amount of acceleration and conviction that it ran today, this thing will bust out that level. That's how this is set up. That being said, when we go over and we look at the oil and gas stocks, they're in trouble. They have been coming down for a long period of time, came off the lows, decent off the lows, pulling back. Now they're pulling back with lighter volume. We'll see how they handle the next couple of days when oil is going south again. The actual, what we have happening in the next few months, meaning actually it's starting right now, is this. The oil drillers, the producers, all the above, they all need credit lines, have credit lines. Well, what happens, folks, is that the banks, twice a year, do a valuation on the amount of reserves that the companies have versus what their credit line is. So you can picture this. When we're talking about the oil market going higher, no problem. You know, oil went from $40 up to 105. As it goes up, what ends up happening is that the banks themselves, they will collateralize the oil that they have. They won't collateralize the oil that they're exploring for. They will collateralize once the well is dug, the oil's in it as they're pumping it out. Okay, so the banks are regulated by the Office of Currency. Now, the numbers, we know what the numbers are. This morning I didn't know what the numbers are, but check this out. This is what the numbers are going to be. The last round, 6 months ago, the banks could lend, well, they can lend whatever they want, but if they don't want the regulator down their throat, they were lending at the aspect of $79, I believe. Let me get to this number. Okay, for $77. At the end of last year, they were lending at $77. Oil was running at that particular point at a $94 to $100. So banks would lend out at $77. Right now, they're evidently giving them a break because what's going to happen on this get-go, you know, oil right now is at $45.32. They will lend at $48. What that happens, however, though, that's, yeah, well, let's see, third quarter, yeah, that's what they're going to lend at. And that's because, oh, I see why they were lucky. So what happens is this, folks, is that the books have to be closed. So January, February, March, April, May, June, September. No, that's still, they're giving them a break because this would be the third quarter, and we're coming up to the end of the third quarter. They're going to give them $48. They're going to lend on $48. That's the bottom line. Now, what happens is this. If you have your credit line that's opened, they'll just reduce the credit line. Let's say, you know, you and I get a oil company. We get $1 billion credit line. What would end up happening is that if the $1 billion credit line is on $77, that'd probably reduce that to $600 million, $650 million, something like that. That's one part of it. The second part of it, and this is where the problem's going to come in with some oil companies. That's why they're scrambling right now. You and I, again, have the oil company, right? We had $1 billion credit line. We spent the $1 billion credit line. Huge problem, folks. This is what ends up happening. When they, in the covenant inside most of these loans, they can call the loan. They call the loan, and they'll only call the difference. This is how this would work. They'd call the difference between what the credit line was at the $77 versus what it is, the $48. So guess what? If we had our whole credit line out, they'd be calling in for $350 million. You don't come up with the $350 million, what do? They're going to come after it. They're going to BK the company. And inside the oil market, so check this out. This is pretty intense. They'll do this faster inside an oil market. And the reason they'll do it faster because they've found the last time that this happened, right? Check, this is like unbelievable, actually. The last time this happened was 1995. And the defaults were huge, but what ended up happening is that every single cent was paid. And every single cent was paid, of course, because what happened is that oil is oil is oil. And once the banks get hold of the collateral, they have the collateral, and the companies go down the tubes. That's why cash flow is so important. Okay, so there's a lot of things that are facing this market right now that are going to be spinning around in a huge way. We go take a look at the tonight in Asia. Tonight in Asia is going to be I suspect it's going to be a rough night because what we did last night is this. The Nikkei still wasn't open last night. I believe the Nikkei is open tonight. And the Nikkei itself had been running into its lows with some real volume. The Nikkei is at the 24th lows. Right now we're at 13,150. That low is 12,743. You know, Nikkei has been closed for 2 days. And when you take a look at the rest of Asia inside 2 days, if we go over and we take a look at Shanghai, what you're going to see, even with the Shanghai government, the China government wanting to keep things higher, well, they can't handle it. Was down $69 last night. That's a lot of money. The Hang Seng, okay, also couldn't handle higher price last night. The Hang Seng went right into the lows, and I suspect what we're going to see out here tonight, it looks to me like the Hang Seng tonight is going to basically give it away, meaning go right after the low. The Hang Seng last night got to 21,008. The low is 20,524. That's the September low. The August 28th low is 871. 20,865 rather. This is going to go right after it. That breaks it, and I suspect Europe in the morning, again, is going to have a problem. Europe saved itself today. Europe saved our markets today, folks. That's what it did. If you take a look at the FTSE, the FTSE and the DAX came into the lows 2 nights ago. FTSE had a decent day. I expect it's going to be right back down, but had a decent day. It was up $96 at 6032. The DAX, though, is screaming. The DAX is screaming that we're going to go break out our lows. And, of course, one of the problems inside the largest problem inside the DAX, and this is where it's just really wild when these things come out of nowhere, is Volkswagen. You know, the low end the DAX is 93.38. We're at 96.12, and what you have is that baby wants to go after it. And if we look at the strength versus the weakness, the strongest equity today inside the DAX was Volkswagen because they canned their CEO. And you had a dead cat bounce. But guess what? That's a lower low that has juice behind it that wants to run into lower price once again. I suspect they're going in the millions now of cars. 20% of Volkswagen production, folks, is illegal right now. It's Tom O'Brien, TFNN. You stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. You gotta love this one. Okay, if you like almonds, folks, what's happening is that in California, of course, you have this huge drought. So almonds basically having a hard time growing there. Well, Australia is where the almonds are coming from right now in a huge way. When we're talking about production, you're talking about going from 40 ton up to about 140 ton. That dramatic in 3 years. Now, what's happening is, what this story is about is that bees in Australia right now, the bottom line is that in order to get the almonds going, you need beehives, and you need a lot of them. What's happening in Australia, unfortunately, is that 5 million bees have been stolen in the last 3 months in the northeast corner of Victoria State. In 2 months. In 2 months, okay? The insects are in short supply. Police say there's a high demand for hives in local almond orchards, where farmers are cashing in on the surging global demand in the 4th year of a drought in California's, because California's the largest producer. Do you know, listen, this is the kind of money involved. It's just like crazy. $15 billion with a B. Yeah. Is that like over the top or what? Amazing. Let's go over and take a look at the aspect of, I had thought, folks, that Micron was coming out with numbers, but I see now that it's saying Micron's going to be coming out with numbers October 1st. That's what I have. Before the market on October 1st. Maybe they changed that. If we go over, take a look at the XLE, we were talking about oil, now we can talk about the XLE. So the XLE today, very subtle. That 13 million shares traded. That's going into the lowest swing point of 12.4. So it took that baby out. That's saying that now it's going to go after the highs of the, well, actually, it already hit the highs of the lows. So now we're going to go after the lows. $58.74. Now, the thing that's amazing about the XLE is this. The XLE, folks, was giving information out at its highs that oil was going to get croaked. Now, you never know that until after the fact. But the bottom line is that the XLE has come down 40%, 40. June of 2014, it's trading at 101.52. We're at 61.98. We bring this back a little bit further, and it looks to me like, well, you have 54 on the agenda, and you have, this is dangerous. 54 better hold. If 54 doesn't hold on this agenda, this is going to be trouble in paradise. Let's go over and take a look at the ExxonMobil. We were talking about this morning a little. ExxonMobil and Chevron, they're still paying big dividends. Don't buy them, folks, okay? Because it's like they're going to come down and at least test the bar of the 24th. Exxon right now is trading at 72. 71.38 is the top of that bar. That's going to go in and test that top of that bar. If we bring this back a little bit further, this is also dangerous. It's like, okay, is it really going to get down to 64? Can. Absolutely can. Chevron, we take a look at Chevron. Chevron, CVX. Chevron right now is trading at a price point of 76.12. That 75.38 is the top of that bar. If we go over and we take a look, now we put oil together. Now watch this. We'll put oil together with the natural gas market. Natural gas, because we get the winter coming up, right? It's the fall. I don't mean to push the winter on you folks up north and wherever it gets cold. But bottom line is that if you look at natural gas is in an ABC structure on the way down. You're at 260. The one-to-one structure is 250. NG, if I bring this back a little bit further, my point here is that energy, folks, is abundant, and energy is going lower. The last swing low on natural gas is $1.90. There's no reason we can't get to $1.90. You know, if natural gas is going down to lower levels, oil's going down to lower levels. Let's go take a look at gasoline. Where is gasoline? So, Robo right now, this was down 2% today. This saved us all a fortune, no doubt, which is really cool. So we're at 136 wholesale. This also had the juice. Okay, so now check this out. The oil market has, you know, some pretty good strength at $40. The gasoline doesn't have good strength at $1.19. This is going to be amazing, actually. XB, let me see this again. XB, because we went to $1.36, but this is looking to me like it can go almost to $1.10. So I put this on a longer basis. 122. Yeah, you can go to $1.10 easy. The low in unleaded gas in 2008, this is wholesale, was $78.50. You know, what the difference is, by the way, this time you built cars to go lower. You know, we spiked down there. That was a one-day occurrence, and it got right out of there. This doesn't have to get out of there because we were down at 122.65 in January. You had the bounce. The bounce got you to 218. This is a wholesale gallon. Now we're back down to $1.38, and it's hitting this level with some juice. And that very well can break that level. You break that level, that's going to put more money in all our pockets. But it looks the way that these gas and oil stocks are trading that they're going to go to a lower price. We go over to the banking system. Banking system set up the exact same way. Not as XLF. It hasn't get croaked, of course, like the XLE. The XLF today, ABC down also. You know, you came down yesterday on 53 million shares. Today what you did is that you went up today on 27 million. Your swing low from the 25th is 22.25. Bottom line, wants to go after that level. You know, if we go take a look at J.P. Morgan, JPM. Oh, look at this, man. Yep, it can't handle price. J.P. Morgan is just drifting lower. You know, we hit the 60.32 today. The low of the 25th is 59.73. We take a look at Goldman. Goldman got hit yesterday, of course, because Lloyd has a form of cancer that hopefully they can help him with. That went down to a price point today of 177.75 and 177.71. Yeah, see this? They're going into this low. Let's go take a look at, we know Citigroup. Citigroup is closing, at the beginning of the year, January, Citigroup had done a presentation with their 7 main cities. Boston was one of them. Well, guess what? We're in September, and they're closing all their branches in Boston, including everything in the suburbs. So much for being a main city to Citigroup. Citigroup's a mess anyway. You're not missing anything with Citigroup, folks. Bottom line, we are at 50.12. The thing that's amazing about Citigroup, when you look at this is like crazy, because this did a reverse stock split, 10-1, right? Yeah. Citigroup is a $570 stock in 06, and it's a $50 stock now. This is Tom O'Brien, it's the TFNN. You stay right there, folks. We come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. We had the Dow Industrials finish off 50, get the NASDAQ off 3, S&Ps were flat. And what you have out here, folks, is this, is that, we had first come down, if we bring this baby right back to how we came down in August. Okay, so August 18th, the SPY's trading at 210. Fast, furious, all of 5 days later, you're down to 182. You did a counter trend bounce. You got back to 202. We come back down, last on the 18th, you came down with volume, 233 million. Then you go sideways with 105 million. You come down again yesterday with 153 million. You try to get to a higher high today with 92. That's a market that wants lower price. It also looks like an ABC structure down. And you got to remember that the A to B is a straight line move. The B to C is choppy. C to D is a straight line move. Depending on how weak or strong this market is, you could go sideways for a few more days. Bottom line, you have two different aspects here. The first one is that you're going to test the lows of yesterday. The larger one is you're going to get into lows of at least the 25th. I suspect we're going to go after the 24th. What I actually expect is that you're going to be going after the B point tomorrow. Why am I saying that? Because that's how the Asian markets are set up, and I suspect the DAX is the mess. The DAX is a real mess out there. If we go and we take a look at the NDX 100, the Qs, they're set up the exact same way. The Qs came off a high of 111. They get down to 98, huge volume. You do the counter trend bounce back up to 108. Then what do? You come down with volume on the 18th with 48 million. You go sideways the next day with 35. You come down yesterday with 47. And today it tries to get higher with 21. So you get a 50% contraction as you try to get to a higher price point. Then it gives it up on price. It can't hold price. It has lighter volume. And what that shows is you're a fundamentalist. What that's showing is what? You have a supply and demand curve. And in this particular case, each and every time that the market tries to get higher, you don't necessarily have people that are going short the market. That can be happening also, but what you have is that people are selling into it. They're saying, I want out of this market. Now, the leader, which is pretty wild, you know, the NASDAQ likes to lead up and likes to lead down. The leader here actually is the Dow Industrials. The large cap Dow stocks are the ones that are going after the August 24th low first. You know, the Dow, I guess that would make sense because the Dow actually topped out May 19th, you know, at 18,351. It's not that we're that far off the high. We're only at 2,000 points off the high. The Dow, however, is showing that those equities, there's many equities inside the Dow that are going after that August 24th swing low. United Technologies took it out today. United Technologies was down 124. The low of the 24th was 87.17. Not only took it out, you're like away from it. You're 60 cents away from it. We take a look at this and we put this on a monthly. This thing's on its way down to 67 bucks. So that's a huge problem. Honeywell, H-O-N, Honeywell is also challenging that low right now. You're down $1.45. You had 5.7 million shares. Huge expansion in volume out here today. Bottom line, you get the gist of it. We're going after that August 24th low. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Grab it and have a blast. Have a great one, safe one. Look forward to speaking right back here tomorrow, folks.